Even James Bond's long-suffering gizmo advisor would struggle to come up with something as eye-popping as the price tag Aston Martin is hoping for if it goes public. The SPY's carmaker of choice is targeting a valuation of as much as £5 billion, $6.8 billion, including debt, in a possible initial public offering later this year, according to Bloomberg News. It's easy to see why Aston Martin's Kuwaiti and private equity owners are cashing in. Before the turnaround, CEO Andy Palmer began in 2014 has borne full fruit. Makers of sports cars are hot right now. Ferrari envy basks in a premium valuation more akin to a luxury handbag maker than a traditional metal basher. Should Aston Martin be valued like a car maker or a luxury goods company? Source: Bloomberg shows forward enterprise value, EBITDA multiple. If, for argument's sake, you assume Aston Martin's EBITDA increases to £250 million in 2018, the purported valuation is equivalent to roughly 20 times those earnings. On the same basis, Ferrari fetches a multiple of a mere 18.5. But Ferrari remains an outlier, and investor sentiment can be fickle. Daimler AG, which owns a small stake in Aston Martin and supplies it with various technologies, fetches less than 3 times estimated EBITDA. Doubtless, Aston Martin would argue has more in common with a marque like Ferrari than Daimler, which also produces lower-margin entry-level vehicles like the Smart, perhaps. But as recently as 2016, Aston Martin was still losing money, and sales had collapsed by half from their 2007 peak. In contrast, the last recession barely dented Ferrari's sales. While the new models like the flagship DB11 are selling well and higher-margin special edition models are generating much-needed cash, Aston Martin still has only a limited track record of success. A second factory that could more than double the number of cars it produces annually won't open until 2019. Ferrari's rich valuation reflects an assumption that profit will expand significantly in coming years, thanks to a new sport utility vehicle and sales of non-car luxury goods. Aston Martin has similar plans, but it's entering an increasingly crowded market for SUVs, plus, like Ferrari, its ambitions to become a luxury goods company are at an early stage. At least though, the cash from various non-car licensing projects will now accrue to the company itself. Until the end of last year, most of it had gone to the company's owners directly. If you assume that by 2020 Aston Martin is selling closer to 14,000 cars a year, up from little more than 5,000 last year, such a steep valuation might not seem quite so outlandish. While buying a sports car is often an emotional purchase, potential investors should still haggle for a discount, corrects 8th paragraph to show. Non-car licensing cash now accrues to Aston Martin. This column does not necessarily reflect the opinion of Bloomberg LP and its owners.